All right, we are currently live. Again, I want to thank everybody for being willing to learn from me, and I appreciate everybody and your trust in me and so on. One thing that I said I was never going to do when I started this Discord is share the full detail of my strategy, um, because this is a business, and we all know how businesses are ran. But tonight, I'm going to do exactly what I said I wasn't going to do. Um, I released a video a few months ago or a month ago, however long it was, of the 9 EMA, 200 EMA strategy. Um, and that has essentially been the entire way that I have. When I first got started, I turned the 500 into $2.4 million in 8 months. This is the strategy that we're going to talk about tonight that allowed me to do that. Um, but as I'm teaching, people get confused because there's too much knowledge coming in at once, for one, and it's hard to keep track of everything that's going on. So people like to rush trades. Uh, an example of this, T Money, is my neighbor. I'm sorry to throw you under the bus, T Money, but you are one of my good friends, so I feel like I'm able to do that. Uh, Friday, I alerted to the 9 and 200 EMA on the 10-minute chart, and blindly T Money went short and he lost it, which T Money trades early, then he always comes back green. Um, so tonight's going to be more so about how to know when to wait on those entries and understanding the trend. And again, that's not me being mean or anything towards T Money, but I understand where he's struggling right now. And that's the only example I have since I've released that video, um, to be able to teach what I'm going to teach tonight. So what we're going to do here is I'm going to name the indicators that I'm currently using. Um, the 9 EMA, the 20 EMA, ATR, which is super trend on Webull, the 50 EMA, 200 EMA, and VWAP. Those are the only indicators that I use. So what we're going to do here is we're going to start breaking them down individually. So I'm going to go in here and I'm going to take some indicators off. All right, so there's just two indicators here now. It's a 9 and 20 EMA. So one thing that everybody in here has been doing, like I said, this is a refresher. It's what you already know, but I'm going to break it down into detail so you guys can finally understand it. The 9 and 20 EMA direct the trend. Once they're broken, the trend usually breaks. Um, so all I use the 9 and 20 EMA for is to identify that trend. So one thing that you'll notice when the 9 and 20 EMA are trending, these identify trends. So we will see them start to separate. The further they are apart, the stronger the trend is. As you guys can see right here, and I'll ask just to make sure, do you guys see how they separated before the trend started on Friday? Okay. So we're looking for these trend days, and this is a good way to identify them, is we see the separation in the 9 and 20 EMA. The only thing these two indicators are used for is directional moves, trends. If we're chopping around and we're tight and close together, it probably means we shouldn't trade, because you can see here we went sideways. Why? Because they were close together. We'll scroll back over here and you guys will see it again. Okay, well, 9, we were moving up. The 920 EMA crossed over. They started separating. That means the trend is getting stronger. Separation, separation, separation. The bias does not change on this trend until that 20 EMA is broken and confirmed. Whatever time frame you're on, 1 minute, 5 minute, 10 minute, whatever it is. So we see here on the 5 minute chart, we're going to use the 5 as an example. Separation, separation. Okay, it looks like it may reverse here. If I was in a short position down here, I would still hold because the 20 EMA did not confirm. We rejected and moved to a lower low. Trends start when the 9 and 20 EMA start to separate. So this is what they're used for. Identifying the trend. Identifying the trend. That's it. Going through here, let's find another trend day. This only works on trend days. Again, right here, spiked up, came down, crossed, came back, confirmed. Look how we're dropping. The 20 EMA never confirms, and we keep dropping lower. Then you look over here, the 20 EMA confirmed, so on. And we can keep going through here doing this. Looking at this chart right here, chop, but this works on trends. So this spike right here, we pulled up, never confirmed the 20 EMA. They separated, and kept moving higher. Does anyone have any questions about the 9 and 20 EMA? That's all they're used for, is identifying the trend. We want them to separate to identify the trend. If they are tight and close together, we don't want to trade that because it's probably going to chop. And you can go and look through here and see overall, yeah, we had big spikes, big drops, big spikes, big drops, whatever. But you can see there was really no separation. And every time we pulled back, we bounced through here. So this was pretty much a no trade day, just based off of the 9 and 20 EMA here. So what we're going to do now is we're going to move into the other indicators. The other indicators that I am about to bring up. Let me answer your question real quick. Sandstorm said, are there any background context that can help ID trend days versus chop days? Essentially, my answer to that question is don't trade when they are tight. And what I mean by tight is do not trade them when they look like this. So we'll highlight an area here. That's a good question. As traders, we always want to assume it's a trend day so we can hold our trades longer. But these indicators help you do the same thing. They help you. Okay, I probably shouldn't trade here because these indicators have not separated just yet. T Money just asked tight on the 1 minute, tight on the 5 minute. It's the same thing, T Money. But what I like to do is I like to catch these 5 minute trends, 10 minute trends, whatever they are, and I catch the reversals on the 1 minute chart. Just like the other day when I called the bottom, it was because we were making lower lows over and over, and then we made one higher low on that 1 minute chart, and that's how I was able to enter that trade early. And then at that same time, you would see the 9 and 20 EMA. They went from being separated to getting tight and then crossing. It's different looking at a completed chart past, after it's already happened. Yes, and this comes down to screen time, Venom. Okay, so we see this chart over here. Well, this happened, so all right, well, we know, okay, well, if this happens again, we know what to do. So as we're learning as traders, our goal is to remember the charts we've seen previously. And we use our technical analysis, our levels, we chart our levels and everything. And that's how we kind of assume, all trading is really assuming where it's going to go, if we're being real here. But having the technical analysis skills like this, it gives the ability to kind of predict where it's going to go. So we can always be wrong as traders, but that's when risk reward comes into play. Do we trade now? Do we not trade? And these are things that help me. And what I'm showing you guys right now is literally, it just helps you identify the trend, or it tells you, okay, I shouldn't trade right now. Someone just asked, so far for December 2nd, the chart now seems to be separated. So does that mean SPY is a good to trade when the market opens on Monday? It's all about waiting on the initial move. And what I'm teaching right now is solely for day trading. You can move to the 4 or 5 hour chart, daily chart, whatever it is, and you can use this on longer time frames. And it's the same concept. So just to be clear, everybody has the idea of the 9 and 20 EMA here, correct? Identifying trends. If they're jumbled like this, we don't trade. We wait for that separation, and then we start thinking about trades. This is the base of it, and this is where it gets started, and this is where it gets fun. Yesterday, I said I was going to debunk volume, and I'm about to explain exactly how I'm going to do that with what I'm going to next. So the other indicators that we use are the 50 EMA, the 200 EMA, ATR, and VWAP. I'll solely use those for support and resistance. If a chart reverses, we know we're going back on the pullback or the reversal to one of those. 9 and 20 identify the trend. These other indicators tell us where it's going. Um, so let me go through here real quick. EMAs. We'll get started with the 50 here. We'll take the 20 EMA off. And let's go over here and find the 50 EMA on the 5-minute chart has been very tough lately. So we'll just scroll through, we'll go to random charts, whatever, and we'll go from there. All right, so what do we see here? The 9 and 20. I guarantee the 20 EMA was right here trending. We pull back, we hold support there on the 50 EMA. When I'm saying, okay, the 9 and 200 EMA are going to cross, or the 9 and 50 EMA are here, that doesn't mean enter the trade because they're going to cross. It means wait patiently, see which direction this chart takes. And if we were looking at that right here, we would see, okay, well, we want to short this, but the 50 EMA held, so we wouldn't take a trade right there. But there's major interaction at these levels. So one thing that we'll notice right here is the 9, 20 or 9 and 50 EMA. What do we notice right here? The 50 EMA is up here, the 9 EMA is down here. Well, they're too far away. These indicators have to be touching to get a move. The 9 and 20 identify that trend. I'm going to keep saying that. The 50, the 200 VWAP ATR are support resistance. The 9 EMA is what holds this together and it's what pushes it, whether it's up or it's down. So if we're looking in this area right here, we can see that there is separation between the 9 and the 50 EMA. So we would not want to take a trade right here saying that it's going to go up. Why? Because the 9 is down here and the 50 EMA is up here. Now, if we scroll a little over here to this area, well, what happens? The 9 and 50 were too far away right there to actually get a guaranteed move. But what happens when they actually meet? This is where our move happens. Right here is when the 9 and 50 EMA are together. We know we're either about to knife down or we know we are about to run up. So we broke the 50 EMA right here off of 9 EMA support. We pulled back, we confirmed the 50 and the 9 EMA, and we crossed. And then look at this move. It's guaranteed money. But the problem that we're all facing right now is being eager to make money. Like I said earlier, I turned $500 into $2.4 million. And it wasn't because I took every single trade that I thought was going to happen. It's because I waited for the right moment to take those trades when it was guaranteed to happen. Over here, I would understand any new trader taking a trade in here. This chart is bullish. We got this pattern bouncing on support right here, coming up. We're blowing through the 50 EMA. I've done this for so long, I know do not fucking trade this because the 9 EMA has to catch up. Anytime the 9 EMA meets any of these other indicators that we've been explaining, there's going to be a pullback if the 9 EMA is not already there at that indicator. So here is our trade. And then look at this. Look at this move. If we just held out right here and not been eager to get rich quick and waited for the right opportunity, we could have had a 500% trade or so on right here. That's what it's all about. This is going to work on any chart that we see that is trending. Let's see if we can find another idea here. Trending. Trying to find a trend day with a reversal here. I mean, here's another example. The 9 EMA is pushing down too far away from the 50 EMA, so we keep bouncing at that bottom level. Another thing I'll say about these classes that I teach is they're not planned because I want it to be spur of the moment so you guys can all see it with me at the same time. I've not planned any charts. I've not planned anything. I'm literally just doing this on a whim. So again here, why did this not break? I want one person to answer this. Why do we not break down here? Although the chart looked bearish and looked like it was going to reverse. Exactly. Too far apart. Um, Someone asked, where would our entry be when the 9 and 50 EMAs cross? It's essentially breaking and confirming support. So if we go back to that chart that we saw earlier, which I don't know if I'll be able to find that chart because, like I said, this is all spur of the moment. That's how I like to teach. So I'm honestly seeing it for the first time with all of you. Your entry would be confirmation. So this answers your question right here. So we broke the 50 EMA. Anytime there's a 9 EMA crossover on any of these other indicators that I'm going to teach, there's going to be a pullback. So yes, you can essentially enter early, but think of it this way. If you would have tried to enter early to get in heavy and, get that high percentage, you would have got in here, then here, and so on. And you would have lost money because the contracts you enter over here are going to be worthless over here. So you have to wait for this perfect opportunity. So your entry point, as they're crossing, you're going to see a pullback on those. So here's the pullback, and your entry would have been right here at that point. So you're just looking to confirm and make sure that that 9 EMA is actually going to cross. So a lot of times when they cross, you're going to see that pullback. The only thing that we don't know is if it's going to hold or if it's going to continue. And that's what the confirmation does for us there is, okay, well, it held, it bounced, and now we're continuing. We broke a previous area. So we're going to enter here and we're going to push it up. Then our next target level to break would be right here. So if we entered the trade down here on this level break, we would stop out if it rejected this level and didn't confirm that level. But you can see it broke it, pulled back, and did not come back and break this previous level. And then we continued up. So it's just essentially, like I said, these indicators that I'm teaching right now, support resistance. And if, like Thor just said, look at the volume confirmation candle too. Once you learn these things, I don't even look at volume anymore. Volume does help, and you can look down here at volume and see, okay, the volume is spiking going through here and all of that. But once you learn how the big people trade on Wall Street, and it's all set up on algorithms, these indicators, you have algorithmic bots trading these, and they're going to scale at these levels. They're going to enter heavy at these levels and so on. So when you use these indicators, you don't necessarily need volume anymore because I know, well, it broke the 50 EMA. I'm not entering this because it's going to fucking pull back for that 950 EMA crossover. Um, and then we can go from there. And then volume becomes irrelevant because you already know what the volume is doing. And that's what I mean by the volume is irrelevant, is because we know it's going to pull back here. That's it. You can look at volume and volume will help you, but that's, to me, like I said, I have a one-track mind and this overcomplicates things. I don't look at volume anymore because I already know the pullback is coming right here. It's a matter of if this area holds or if this area doesn't hold. Um, and then we go from there. Does anybody have any questions about the 9 and 50 EMA? And yeah, nice tells on those bars. It's all simple and easy, and you can be like, oh yeah, well there was a tweezer bottom or whatever. But when we see these indicators starting to cross, we know, okay, it's about to knife or it's about to run. So that takes out pretty much most of the technical analysis side of it. We don't have to look at volume. All we have to do is literally look at, does it confirm support or does it reject it? If it would have rejected here and broke down, it would have went to this level right here. So we could short to that level. And then if it breaks this, it's going to go to this level. It's going to be constant new lows being made on this. So it would have went to this level. So if it broke this and came down, it would have went to this level. If it broke this level, it's going to go to this and then to this at each level that I just mentioned, Steve-O. So here, scale point, scale point, scale point. That's it. So when I alert these trades and I say, okay, the 9 and 200 EMA are together, It doesn't mean that they're going to cross. It means wait for the directional move. And all you would have to do on this is simply make a previous high and a previous low when I alert the 9 and 200 EMA. So you could do this. All right, well, I'm going to trade whichever level breaks first on this crossover. So if it breaks this level, I'm going to short. If it breaks this level, I'm going long. That's all it comes down to. And now is where it gets fun because you guys are going to see. I'm assuming everyone in here can count. So you guys know numerical order. Um, 9 comes before 20, 20 comes before 50, 50 comes before 200. It's that simple. You're going to get the same interaction on the 9 and 50 EMA as you are on the 9 and 200 EMA. So let's go over here. And I'm going to pause my mic for a second, give everybody opportunity to ask questions, and then we'll get started before we get the 200 EMA going here. All right. Again, these everything I'm teaching tonight is essentially to keep people from rushing into trades because I know a lot of you are full-time workers. So when you see me alert something, you want to go ahead and enter. I'm teaching you guys how to confirm and make sure that this trade is perfect. It's an A+ setup. Um, Sandstorm asks question about stops. You use hard stops or mental stops. I use mental stops at key reversal points. So say I would have entered short right here, I would have stopped out at this level. So the same place I would buy long is the same place I would stop out if I was short. All right, so there's no more questions about that. So I'm going to take the 50 EMA off of here. And I'm going to show you guys how these all correlate. And the end game is probably what's going to blow your mind. So we're going to take the 50 EMA off. Same concept, same fucking concept here. And this is where it gets to that light bulb moment. The 50 EMA is going to give you that early entry. Um, like I said, the 50 EMA, 200 EMA, VWAP, and ATR. They're all going to be synced together, and the same thing is going to happen at all of them. So, can somebody tell me here why we would not have entered a trade here? Although it was a double bottom and we bounced. Why would we not have entered a trade down here in this area after I'm pushing up, thinking that this stock is going to run? Exactly. The 9 EMA is too far away from the 200 EMA. There's always going to be a 9 EMA pullback, unless it's like FOMC or some volatile ass news. We don't do that here because the same price you're going to buy calls right here, you could probably get them for 80% cheaper over here. The 9 EMA is too far away from the 200 EMA. It's going to pull back to that 9 EMA. Is it going to hold? We don't know. We have no idea. Where would the perfect trade be on this chart? Same thing. Same thing. Same thing. Same thing. Over and over again. When did the breakout actually happen? When they crossed. Now this easily could have came up to the 90 MA could have came to the 200. We could have flattened out and we could have reversed right there. We could have reversed. Sam just said the 9 200 is millionaire jackpot cross. Sam, if you learn this strategy, the 9 and 50 EMA is the millionaire cross, but it's a matter of knowing if that 200 is going to cross as well. So we can get an early entry. So I trade like 50 contracts at a time. So I'd buy like 50 contracts there. I'm going to scale at the 200. I'm going to scale 25% at the 200 EMA because the same thing that we are looking for on that 50 EMA crossover could happen on the 200. It could reject and we could reverse. But at this point, we entered on the 50 EMA crossover, and I'm going to pull the 50 EMA back up. So I'm going to pull the 50 EMA back up right here. This crossover. So we didn't know if it was going to reject or continue right here. We enter the trade on the high break after the confirmation. We take it here. We're going to scale here because the same thing that we were looking for on that 50 and 9 crossover could easily happen on the 9 and 200 crossover. We're already in this trade. We scale here. I have 50 contracts. I scale 30 of them. I have 20 runners. The 30 that I just scaled right here made me 200 bucks. The 20 that I have left on this crossover made me 1,000. So I'm up 1,200 bucks on the day just from knowing to wait for that 9 and 50 crossover first. And I know my scale point is going to be here. So when we're trading intraday, I know I map out levels pre-market, but later in the day, we don't necessarily need those levels anymore because our levels become our indicators. That's what they are. The 50 EMA, the 200, the VWAP, the ATR, those are our levels now because on reversal points, they're going there. We know for a fact they're going to go there. We don't know if they're going to break them. And this crossover right here tells us, all right, that's fucking hold this and let's get rich. That's what it's all about. Same thing. Going down here, it's the same thing. We confirm support. I may not get rich right here, but I'm going to make money because I know if it breaks this, it is guaranteed to go to the 200. Guaranteed. That's why a lot of you guys see me trading every day and you guys stop out of your trades and I'm still holding it. And I'm like, why the fuck didn't you hold it? Well, yeah, we pulled back, but we were down on the trade, but we know where it's going. So what's the fucking point of, mapping these levels and knowing these indicators if we're not going to trust ourselves? And that's what everybody does, Tommy. Everybody does it. Everybody's guilty of that. And why do we wake up in the morning and chart? Because it's going to give us an idea of where this chart is going to go. And we broke that 50. We confirmed it. So we know for a fucking fact that we could still chart levels and do whatever we wanted, but this level becomes irrelevant. This will be the level to break. But if we're doing this, we're going to hesitate on every fucking trade that we take. Why? Because, oh, well, I might enter here, it confirms support, but it might reject here because this is a previous level. Well, it might reject here because this is a previous level. No, it won't. Once this crossover happens, it's going to the next indicator. So later in the day, these indicators become our levels and these key levels become irrelevant. That's the way I trade. That's how I know to hold these trades longer. And that's why I make money. I'm not panicking because I know where the stock is going to go. We can find more examples of this if you guys want, but you guys kind of all have a general idea. Here's another one with the 9 and 50. All right, well, why did we not enter the trade here? Oh, it's bouncing up. It looks like it's about to run. We're at a key level. Why will we not enter this trade right here? That's me waiting on somebody to answer it, by the way. Too far. The Canuck got it. It's too far. The 9 EMA is too far away from the 50 EMA to have that fucking breakout. The breakouts will not happen until that fucking crossover happens. Now, if we move this over to here, well, if I can do it. Now, what do we see if we were patient and waited? A fucking monster move. A breakout. If the 9 EMA is not close to the initial breakout level, the level will not break out. That's literally all it comes down to. All it comes down to. If the 9 EMA is not at the level, it is not going to break out. And see, Jaden said crazy volume spike. I did not even look down at the volume because I don't look at volume anymore because I know how these algorithms work. I know what's going to happen and I know to wait. That's how last night I talked about how I was going to debunk volume. When you know these things right here that we see on this chart, you don't even have to look at the volume anymore. We're intraday traders. We're not holding this for 2 months. We know there's going to be a fucking pullback. The 9 EMA is not there. That's literally all it comes down to. All it comes down to. So again, T Money. When you see this, I know T Money is he used to trade small caps. One of the best technical analysis people that I know. Um, but he likes to scalp. Now, if I can get him out of scalping this part and solely trading this part, this motherfucker's going to be a millionaire in a year. That's all it comes down to. T Money, I would love your input if you want to throw it out there. If not, that's completely fine. But that's it. We're all here for one reason. We're all here to make money. You guys are all paying me to teach you how to make money. But when I'm teaching things like this, you guys have to understand that this is what I'm doing. I made 458,000 fucking dollars this year, and the biggest account I ever had this year was $2,000. I traded small with all of you to show you that there is a way, and this year I fucking did that. Fucking $458,000, and my biggest account was 2,000. That is insane, insane. It's timing the entries. I'm making 1 to 2 trades per day max, but I'm waiting on these perfect entries. Perfect entries. And I need to go and look at my trades for the year because I guarantee you, say I've taken 200 trades, I guarantee fucking you I've only lost 15. I agree. It's all about timing. And for T Money, you're absolutely right. He said, I agree. It's all about timing and taking entry when the big move is going to happen. 100% correct. But you're a full-time worker, so you can't necessarily be there, to wait for that crossover or whatever it is to happen. And that makes you eager to trade. Tomorrow is going to come. Just don't trade unless you're in front of the computer when it happens. That's what it all comes down to. I guarantee you, T Money, if we could stop you from trading this to only trading this, I fucking guarantee you'd have a 6-figure year next year. I guarantee it. Guarantee it. And I'm sorry I keep using you as example, T Money. But I know you personally, and I'm not going to throw anybody else under the bus that I don't know personally. No, and I think it's something you need to hear, T Money, because I 100% think that you're one of the best people I've ever seen at technical analysis. It's just the panic trading and wanting to not miss the breakout is what kills you. So fuck it. If it keeps going, worst case scenario, there's going to be another trade come up later. But we wait for it. We wait for it. We wait for it. And then again, what do we see next? So one thing I found is the 50 EMA is the start of this. On the 5-minute chart, the 50 EMA is the start of the move. We don't know if it's going to reject the 200. But where's the next big move at? The 200 EMA. So we would scale our position here from here. So this is what's the confirmation? 585.51 to 586.50. So $1 move right there. That's if we're trading 0 DTEs, it's going to be 100% play. And we're confirming We had 50 contracts right here. We're going to scale 30 right here. And then our last 20 fucking take us to the moon. That's what it's all about. And that's what trading is about is understanding how to be patient and wait on those moves to actually happen. Um, I can keep scrolling and show you guys more examples of this, or if you guys want to move on to the next subject, we can. But feel free to ask any questions about the 50 or 200 EMA right now, if you have them. One more, please. Absolutely, Venom will do it. And again, before I pull, I'm going to scroll down here so there's not a chart up here. I want everybody to listen to what I'm about to say. These things have to be in numerical order and not chopping for them to work. So when we're counting, we don't say, okay, well, 50 comes before 20 and 200 comes after or before the 20. No, we say 20, 50, 200. They have to be in numerical order right there, guys. And girls. I know there's women listening. They have to be in numerical order. So if we're looking at this past chart that we looked at, what do we see? We see 9, 50, 200. This is the only time they work is when they're in numerical order like this. Um, they're called faster and slower EMAs. So the fastest one is going to be the lower one, which is the 9. The 9 EMA is the fast one. The 50 is a little bit slower, and the 200 is a lot slower. They have to be in numerical order for these to work. So if you ever see the 9 EMA here, the 200 EMA here, the 50 EMA up here, whatever, don't trade it. So let's find one more example. And again, this works on trends, 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 trends. If you guys see these, all these indicators here chopping, just don't trade. Yes, exactly, Sandstorm. And I guarantee you guys, all of you guys that are in here with, $200 to $500 accounts, $1,000 accounts, whatever it is, if you're making 20 trades a day in those accounts, you're going to trade sideways and keep having to redeposit money to keep going. Wait for the perfect setup. And I guarantee if you just chose one perfect setup per week, your account would double probably fucking weekly. That's what it comes down to. So we see major separation between 9, 50, 200 here. We're going to keep scrolling because we're already in a trend. We're looking for those key reversals, All right. So over here, we're looking at it. The 9, this is pre-market, so this is just an example. But what do you see when that 50 EMA breaks and confirms? We confirm support, all wicks right there. We break down. Where do we bounce? The 200 EMA. A lot of times when you're doing this, say the market has been trending up for a long period of time, say 3 days, 7 days, 10 days, whatever it is. When we're looking for these reversal points, we're looking for this type of stuff to happen. And, without zooming right or left or whatever, I can tell, okay, this is probably going to start setting up for a downtrend. And then it takes multiple days. You don't want to get caught in these moments. That's why I've hated trading SPY for the last few weeks, is because we're at all-time highs. We're going to be stuck in a range until that range is absolutely obliterated. And you can see here, yes, we could have made money, shorting the 50 EMA to the 200 EMA or shorting the 200 EMA or whatever. But this is where this stuff gets hard. The strategy that I'm teaching comes down to more so trends and reversals. And once we throw these other indicators in there, I'll be able to explain that just a little bit better. I even have this mapped. I didn't teach this. I did not teach this at all. I haven't talked about it, but why do you guys think I have this area highlighted right here? And why would I have not entered a trade? Just want to make sure everybody's learning right now. Correct. Watching for the 9 and 50 cross. The 9 EMA was too far away. So I would not short this. I would not short this level until I saw the 9 EMA come closer. And then look what happened after. And see, I think what a lot of people are struggling with is, oh, fuck, we've been trending all day. This has to reverse. Okay, well, you might as well just go fucking step in front of a moving train if that's your mindset. It's not going to reverse until these indicators are broken. And if you look right here, it didn't. And then it skyrocketed. So I guarantee you somebody in this Discord shorted over here. without realizing that the 9 has to be close to that 50 for it to break down. And it's so simple when you start thinking about it, guys. It's literally so simple. You want to chase it and you want to catch it early and you want to make this money quickly. The 9 is up here and the 50 EMA is down here. That move will not fucking happen until that crossover happens. Now, if the 9 EMA comes down here and rejects off of this, then we could go long. But that move that you're looking for on the downside, trying to be too eager to trade, is not going to happen until that crossover happens. That's all it comes down to. So to recap, Jesse said there's no 920 crossover to look for. Just 920 separation tells us it's a trend. The first 950 9 has to close. Second cross 9200 where it may reject the 9, might go flat. Yes. Anytime these indicators come in, Jesse, long story short, the 9 EMA is going to move down here and it's either going to cross or it's going to break. That does not mean enter the trade, because once that crossover happens, you know there is going to be a pullback to the 9 EMA. You want to wait for that 9 EMA to actually cross over. But as we move forward, I'm going to give you guys a little fucking trick here that's going to blow your mind. So now we're going to move over to the ATR. As long as nobody has questions about the 200 EMA here, we're going to move over to another indicator. I think Venom was asking how close they have to be for you to actually short the trade. Um, Venom, you can let me pull back here. I know this is not getting off topic. These questions are awesome. I'm just trying to skim through this because we have limited time. Uh, you can usually tell if they're going to cross by the angle of the crossover, essentially. All right, so right here you can see the 9 and 200 EMA. Same thing with the 9 and 50 up here, top side. It's usually the angle of the 9 EMA that is moving through the indicator. If it's a very sharp move, like you can see, this is going straight through it, and we went into a downtrend. Um, it's usually going to continue there, but you do want to wait. So we play double bottom breaks because we've learned how to get in these trades early. So we would have shorted here, essentially. So right here, we would have shorted this candle at the 200. And we would have shorted there, and pulled down. But you see the angle right there, Venom. I think this is going to answer your question. You see the angle that it's coming through the 200 there? Okay, so let me find an example for you really quick. Well, actually, I don't even have to find it. It's right here. Um, you can see when it gets to the 200, it either curves or it just knifes. When you see the curve right here, it usually means it's going to reverse. So it's how it approaches these indicators. So if it's the 50 EMA or the 200 EMA, it's how it approaches those indicators that tells you which direction it's actually going to move. But one thing that you can bet your ass on is there's going to be a pullback once it happens. So, all right, here it happens and there's a pullback. So if you miss the trade right here, this pullback would have decayed 0 DTEs to the same price it was up here. You're not necessarily missing anything, but you can re-enter that trade right here and make just as much money off of this drop as you would off of this drop. So hopefully everybody's on the same page right here. If anybody's not on the same page with me right now, let me know so we can answer it, and then we can move on to the next topic. Jaden said, but I will say the 9 EMA kind of fluctuates its angles on big candles, wicks like that. Hard to tell if it's curving away or angling into it. You are absolutely right, Jaden, on that, and that's why we wait for the pullback to the 9 after the crossovers happen. That's where the entries are. Because one thing that's guaranteed, when that crossover happens, there's going to be a pullback. And if it confirms that pullback, then we can enter these trades and then we can make our money. So you are absolutely correct. when I alert these crossovers, which I do daily in the Discord, um, I'm not saying, okay, the 9 and 200 EMA are about to cross right here. I'm saying the 9 and 200 EMA are close together. So we are about to get a big move, but we have to wait on the direction of it. That's all I'm saying when I say that. I'm not saying, okay, short this shit or go long on this shit. I'm saying a move is about to happen, guys. Be ready for it. I obviously can't say enter this, exit this, whatever. I will get sued because I know all of you guys are family, but there might be one person in my Discord that gets fucked and then I get sued because I lost some money. So I can't say that, but I can alert you guys on my strategy and tell you what's about to happen before it happens. Um, do you mostly trade the 5 minute? No, I trade all time frames. 1 minute, 5 minute, 10 minute. Once I see something like this happening right here, then I may go to the 1 minute, look for earlier entry and so on. But again, like T Money said, that's not a waiver. T T Money, you're still that would be awesome, but you're still in the scalping mindset, T Money, of that you were in the small caps. If you can get out of that scalping mindset and play the chart, I guarantee you your $100 days that you've been getting daily is going to turn into $1,000 days. But it comes down to, noticing things like this that we're seeing right now and being able to hold those trades longer instead of, panic selling for a stop loss. Here's another good example of the 9 and 50 EMA, what I mean on reversals. How do you differentiate a reversal and pullback? That's my struggle. Perfect example. I'm glad you asked that question. Red Crow is a perfect time to ask it because we see the crossovers happen up here and we see the pullback. All right, look how the 9 EMA, and this should be a light bulb moment for you right here. Okay, you see the angle that the 9 EMA came through here at the 200 EMA? Well, look at how it's going through the 50 EMA right here. It's cocked sideways and it's moving up at a sideways angle right here. And then we drop. Over here, it's pushing down through the 200 at a straight angle. What does this tell us? That the 9 EMA is getting weaker. That means that the volume is dying, which is why we don't need volume. The volume is dying, and there is going to be a pullback here because the 9 EMA is getting weaker. So one thing that you'll see on trends is with the 9 EMA, if it's a trend, it pulls into the side of the 9 EMA, into the side. On reversals, it pulls into a flat spot. So we can see here, everybody tell me if you don't understand. As we're pulling down here, we pull into the side of the 9 EMA. On the reversal, the 9 EMA is now flat. That means the trend is getting weaker and we are about to reverse. So we're going to close our short positions. The 9 EMA is getting weaker here. We're starting to curve. The candles are coming into it at a flat angle instead of coming into the side of it. On trends, we come into the side. On reversals, we come into a flat EMA. Does that make sense to everyone? All right, so now what I'm going to do is I'm going to bring the other two indicators in, but I'm going to take these current ones off. And we'll leave the 9 EMA on there. The reason I use the 20 EMA is that's usually my stop loss for reversals. Whatever time frame I'm on, that's usually my stop loss. So that's why I'm only showing you guys the 9 EMA right now. All right, so we got the 9 EMA pulled up. So we're going to bring in VWAP right now. Same fucking concept. It's just finding it on the chart to have that general idea of it. So right here, you can see we crossed right here, but it was very weak crossover. Nothing happened. It would just pull down, pop back up. So it's just having that general idea of these trends, which I will say I don't really use VWAP anymore. I could take that off my chart. It's more so the 200 EMA. So it may take me a minute to find an example here of what I'm talking about. This could be an example. So you see how it bounced right here on the VWAP and then it pulled down and it broke. And then the angle coming back on the reversal. So I use VWAP essentially for reversals. Um, I want to see that 9 EMA push through it. And you see right here, we broke VWAP, confirmed VWAP on the 9 EMA, and we pushed through. But you also see the angle of the 9 EMA going through that. And if we come back to the indicators over here and pull the 50 or 200 EMA up, this chart would probably make more sense. The reason I don't necessarily think that we need VWAP any longer is because look how close they are together. You see the 9 and 200 crossover, same time that you see the 9 and VWAP crossover. And then we push through the 50. So what we're doing here is initially setting up for a trend to be in numerical order. So right here, you see the 9, the 200, the 50. So this chart is trying to recalculate itself, I guess you would say, to actually be in order. So the 9, 250, that's not in order. All right, well, now it is. After this breakup here, you have now the 9, the 50, VWAP 200. Does that make sense to everyone? But VWAP is used the exact same way that the 200 EMA is used for me. This chart is, I don't know a way to say it. Like I said, I'm mentally impaired, I guess you will. But I see these things and I see, okay, well, we tried to break down 3 times and this was a false breakout. We're pulling back up. The 9's coming here. So VWAP is irrelevant. I know on pullbacks, we're going back to VWAP or we're going back to the 200. All you need is one of those. You don't necessarily have to have the VWAP on your screen. But the crossover happens here and then the chart resets itself. Okay, we reset itself 9, 50, 200. We pull back to the 50, confirm support, and then we run for the rest of the day. So anybody have any questions about VWAP? I can show another example of what I mean. VWAP is, I consider a VWAP as a magnet, like Jaden just said. Ryan, you said before, VWAP acts as a price magnet. Does that apply to any of our other indicators? I would say the VWAP and the 200 EMA are very close, but one thing that you will notice on any chop day is the VWAP is the price magnet. We're going to go back to it over and over again. On key reversal points, though, which we'll get to in a minute, we're going to go back to VWAP or we're going to go back to the 200 EMA. That 50 EMA provides us solely an early entry. Would you have traded the 200 even though it wasn't? Yes, no, I would, Venom. I would because of the angle that's coming into. And the reason that I would have traded this on the long side, which I'm sure I probably did in the Discord, I don't really remember. But what you'll see here is a double bottom. Okay, well, normally when double bottoms break, it's a huge sell off. So it'd go down here or wherever. The fact that it false broke and only went down to here tells me, okay, well, the bears are weak right now and the bulls are holding this thing up. So I'm looking for any possible reason to enter this trade long. So I would have looked at levels. And what do we see on that? So 9, 200 broke here. We have our level up top side and we confirmed support and then we went higher. And hopefully I'm going to start blowing you guys' minds with this after I get going here. But hopefully everybody's enjoying it so far and everybody's learning. If you're not learning, feel free to ask any question you have right now before I move on to the next topic. But I love doing this. I love talking about this. You guys can't ask a bad question, I promise. Feel free to ask anything because now's your time to ask it. But this is going to teach everyone how to be patient for those trades. Like, well, how did I make the $458,000 this year? It's because I was patient on the trades. I didn't take fucking 40 trades a day. I took 1 or 2. And that's all it was. Like you guys see me having $1,000 days on a $200 account. This is how I'm waiting and being patient on these. All right. So another thing that I want to point out here. What we're going to do before I move on to the ATR, which I mean, I guess I can go ahead and do the ATR. It's the same thing that I've been harping on VWAP, 200 EMA, 50 EMA. It's the same thing. Same thing. When did the ATR, like for instance, right here, I can ask the question again. You guys all already know the answer. Why did we not break here? Because the 9 EMA was too far away from the 50 EMA. Now, if we draw a little level right here where the ATR was, so yeah, ATR break. Would we enter this trade because it broke the ATR? No, we fucking wouldn't. Why? Because the 9 EMA is too far away and it's going to pull back to the 9 EMA. So what we would initially do here is we would make a key level at the ATR and we would wait for the ATR break. So instead of trying to enter over here thinking that we're going to break the ATR and run up, we see the 9 EMA is too far away. We know to wait on the trade because there's going to be a 9 EMA pullback. It's fucking guaranteed. We would wait for this level right here where the ATR is for the crossover. And that's when the breakout happens. This is where key levels become irrelevant because once this happens, it moves. So if we were just looking at this chart, we would say, well, it has to break this level. No, the fuck it doesn't. This crossover just has to happen to give it momentum to move because the volume is going to spike. And without looking at volume down here, I can already fucking tell you that the volume spiked. So let's go look at it. It's fucking crazy how that works. That's why volume's irrelevant. Because if we use these indicators, we know where the volume spikes, we know where the volume declines, we know all of it already without having to look at it. Like it's kind of funny. I love doing this on a whim like this because I love being right. But yeah, that's literally it, guys. Uh, where's the volume spike? Well, where's the crossover happen? Um, 9 EMA trend, 9 EMA crossover for the 50, the 200 VWAP, ATR, and this is something that is about to completely blow everyone's mind. The key levels that I teach every day, I know I'm very good at it and I get it to the penny. But here's where it gets crazy. The indicators that I just showed you guys, the 200 EMA, the 50 EMA, VWAP, ATR, the 9 EMA reacts the same fucking way at key levels. Same way at key levels. So even if you don't have those indicators on your screen and you're very good at mapping key levels, you can take everything off of your chart and you can solely use the 9 EMA and key levels. So if we can find some key levels, there's the 9. What else do we have up here? Super trend. Let's go find a random ass chart somewhere. All right, we'll map some levels right here on this random chart just to get some interaction. All right, so we have a top side level. We have a low side level right here. Does everybody see this? We can map some mid levels. Pre-market highs. We can map all of this and we'll see how the 9 EMA reacts to these levels. All right, so essentially if we're looking here, all right, well, we broke this level here. When did it actually break out, guys? When the 9 crossed the key level. It's so simple. And that's why I said I think that this is going to be the light bulb moment for everyone is because you guys are, I do think I'm a very good teacher and I'm causing people to overanalyze these charts, but it's very simple. Uh, when did the breakout happen over here, guys? Yeah, it broke the level over here, but why did it not actually break that level? Because the 9 EMA was too far away. When did it actually break the level? When the 9 EMA crossed. It's simple. It's literally simple. Now let's keep scrolling over here And let's look at this. All right, well, we pulled down to this level over here. Well, when did the breakdown happen? We came back, we confirmed this level two times, keep pushing down, and it could be the same thing with the key levels. Watch this. All right, here's a key level. All right, well, when the fuck did this key level break? We broke this key level right here. We pulled back to the 9 EMA confirmed, but the breakout didn't happen until that 9 crossed that key level. It still blows my mind because I'm like, how the fuck has no one else ever seen this? Because I know I'm the only person teaching this right now. But I see it every day, and that's how I know to hold these trades. It's insane. So if I would have entered this, yes, this was a false breakout. It pulled back, confirm, confirm. I would have held this short position to this level every time. I would have scaled right here, and then I would have mapped previous levels. So here, this would have been my stop loss. Look how close that last candle came to that stop loss. And then we push down further. The 20 may have stopped you out, but what I'm looking at, Jaden, honestly, if I'm being completely honest, I don't fucking look at the 20 EMA anymore. But I also teach people, and I have to make sure that everybody's not blowing up their accounts because, their risk is on me. So I'm more so looking at how the 9 EMA is interacting with these levels. If the 10 if the 20 EMA breaks on the 10-minute chart, then yes. That's usually when a reversal happens. But I've timed it so well that I can initially read when that reversal is about to happen. So if we're on a trend day, say we're trending down, we're going to keep making constant new lower lows. So the first lower low that doesn't break is usually when the reversal happens. Like I called the other day, it's probably going to reverse here. I use the 1 minute chart for that because if we're trending on the 10-minute chart, we're probably trending on the 1 minute chart and so on. So I'll go to the 1 minute chart and start looking for those reversal points. Okay, well, we didn't break this previous low this time. We're going to bounce here. Um, I would pull let me pull this. I hope it doesn't change the chart for me. And it might change the chart when I flip to the 10-minute. What's the date here? 11/14. And now, if you see what I'm talking about, Jaden, right here on the 10-minute chart, the 10-minute 20 EMA is what I look for on those reversals. And you can see the 10-minute 20 EMA never did. And without even having to change the time frame there, I already knew what it was. That's why I said, I don't really need the 20 EMA anymore. But until you can get to that point of what I just kind of explained, then you should leave the 20 EMA on your chart. But after you do this for a long time, you don't really have to. But you can see the 10-minute 20 EMA did not break and confirm, and it kept us in a short position right here. But same thing, key levels, guys. Uh, the key levels I post in the morning, which I haven't been lately because of this kind of my strategy evolving. Um, the key levels are the exact same way with the interactions on the 9 EMA. The with the 90 EMA crossover as they are with VWAP, 200 EMA, 50 EMA, ATR. They're all the same. And by showing you guys these examples, I think you guys all start to see it now. And hopefully my goal is to have you guys not rush trades anymore because we know we're going to get a move here. We don't know the direction of that move just yet. It's how that 9 EMA interacts with that certain level that we're at, whether it is the 200 EMA or whether it is a key level to the penny. Um, Here's where it kind of gets fun, and this is going to be the last topic that I have to talk about, and hopefully everybody has enjoyed tonight. These are things that you guys have all heard me say and teach, and this is my way of putting it all out there for you guys to all understand. Um, but hopefully, starting tomorrow, there's less people rushing into trades, and it all makes more sense to you all. But when we say, okay, well, the 9 and 200 EMA are about to cross, whatever. we don't have to wait for that trade there. We can find the reversals to those levels. So let me find a trend day real quick for us. All right, so all the indicators are on the screen now. I'm trying to remember when that last trend day was that we had. All right, for instance, down here, we're still on the 5 minute chart. So we're trending down, and this is what I was talking about. Anytime we're in a trend, it's making stair steps. And what I mean by stair steps, to the people that don't understand my lingo just yet, um, we're making stair steps. So if we're trending down, there's going to be lower lows each time. So here, this is going to be a terrible example, but you guys all understand. Here, here. All right, now do you guys see how we're on trends? We're making lower lows. If it's going up, we're making higher highs. Does everybody see this? I call it stair steps because it looks like we're stepping downstairs right here. I called the reversal right here on this one for the Discord the other day, simply because why? Well, we didn't make a lower low again. We actually bounced and made a higher low. So now, like Jaden just said, we're going to start taking these stairs up. So on. So that's how we find those reversals. But what would our target be on these reversals? The same thing it would be in any circumstance. So if we're breaking right here, the 50 EMA is where we would scale. Look where it rejected the 50 EMA. Where would our next target be? VWAP, ATR, or the 200 EMA. Whatever comes first is our first target. So if we look up here, where did it reject? Oh, conveniently, the ATR and VWAP. That's crazy. It's almost like we knew what was going to happen. And then we start pulling back down, and then we would have stopped out over here in this area. But you guys see it, targets. That's how we know where it's going to fucking go. 50 EMA, VWAP, 200 EMA, ATR, any of those, whichever one is first, is our fucking first target on these reversals. And look what happened. Rejection, rejection. There it is. Even over here at market close, where did it reject? The 200 EMA. That's it. And trading is that simple, everyone. And hopefully, the people that are listening right now, tomorrow you will come in and you guys will see exactly what I'm talking about, and you will have a better understanding of this. It's not hard. Just use that 90 EMA and understand how it correlates with key levels, ATR, 200 EMA, VWAP, whatever it is. Just understand how that correlates. And on reversals, we have our targets. So we started up here in the morning and we had our levels. Our levels told us where it was going to go to start. As we're reversing, those levels are still going to work, but our targets are going to be the 50 EMA, VWAP, ATR, 200 EMA. And it works perfectly every single fucking time. Every time. There's not a single time where it doesn't work perfectly. Down here, we reversed lower lows, lower lows, lower lows. We reversed 200 EMA, 50 EMA. They couldn't get synced, but they go there on those reversals. So we don't have to wait for those crossovers to happen, but we have to wait for trends to break to take it to our targets. Now, if we can catch a trend early, we ride it up all day. Perfect. That's the best days that we can possibly have in the market. But we have to wait for these indicators to set up for us to take them to the EMAs that we're talking about here. And that's when money comes in easily. Like, this is not hard. And I know it's, you guys probably disagree because I've been doing this for so long and I see it, but don't let anything cloud your judgment. Just take the trade and understand, have targets, know where it's going to go. And that's what it all comes down to. And if we look at any of these charts here, All right, well, we pulled back over here. A 50 EMA held. We bounced up higher. Well, when we reverse, where the fuck are we going? To the 50 EMA. Well, if we break that, where are we going? Where's it going to go to the ATR, VWAP, or 200 EMA? Well, where did it bounce? VWAP. Well, when VWAP broke, where did it bounce? ATR. Well, when ATR broke, where did it go? 200 EMA. When we broke that and we pulled back, where did we come? 200 EMA. Where did we reject? ATR. And then we broke back up. And then when did the trend reverse? When all of those indicators were broken again, popped up, pre-market confirmed 50 EMA, ran up again. It's easy money. The reversals are everything, but it's knowing how to time those reversals because if you're a scalper, you may take four trades before you actually get it right. And hopefully this shit's helping everyone. Um, just like this right here. Okay, well, it looks like it's going to knife down. Well, why would I not take this trade? Well, because there's support right here. This support has to be broken or the 20 EMA has to confirm. So instead of entering over here thinking it's going to break down and go to the ATR, I would wait for confirmation. My confirmation would have been right here. Candle opened and closed under that 20 EMA, and then we push through and we knife down. So I think I've covered everything. Hopefully everybody enjoyed this tonight. I'm going to open up the floor for any questions, but this has been awesome. And the Discord will still be open for any questions that come after this. I'll be glad to answer it. But I think I've covered everything, and hopefully that all of this is more clear to everyone because once you see it, it's kind of like riding a bike. You never forget. Um, and I think this is one of those things that, like I said, it could be a light bulb moment for everyone. Once you see it, you can't really unsee it. Stop over analyzing these indicators and understand how the 9 EMA correlates with them. And that's when we get rich. Don't enter these trades too early if the 9 EMA is too far away. Um, Wait for that right moment because it's going to happen. Um, Jaden said, could we go through the entire strategy to determine how we can identify an A plus setup? Um, as it's setting up, we would have to look for the chart all day while working. Jaden, I'll tell you what I'll do. If you can find me a trend day and give me the date, I'll go to that date and show you how I would play it. And while you're doing that, I'm gonna pause my microphone and run to the bathroom really quick. And again, I know we're on limited time. Um, the reason I say limited time, I don't have anything to do. Um, I can't go through all the time frames and show you guys how this works. It works the same on all time frames. If you are looking at a certain trend, you can get a earlier bounce on the 1 minute, but if you're going to use the 1 minute, all time frames have to align for the same bias. So if the 1 minute is bullish, the 5 and 10 and 30 minute have to be bullish. That's the only time that I use the 1 minute chart. If I am going to use that 1 minute chart, they all have to line up. If the 10 minute chart's bearish and the 1 minute chart's bullish, don't fuck with it. NVDA. Let me delete everything off of this. 1114 right here. That would have been a tough day that we would have got murdered on. Um, Essentially, it would come down to the same concept here. No, I'll use this, and I like this because this one honestly challenges us. Um, we would have to come into this with a scalper's mentality, which I want everyone to understand. Any trade that I approach is a scalper's mentality. I'm looking at my next target, and I'm going to scale there. And when I say I'm going to scale here, when I'm scaling, I'm making sure that this overall trade cannot go red. So this is a perfect example. Thank you, Jaden. So first off, I would map the highs, which let me move over here, pretend like I don't already know what's going to happen. I would map the highs and I would map the lows. But looking at this, I would see initially the EMAs are jumbled. So I would have a bullish bias on this chart right here because the 9 EMA is pushing forward. And I want to ask this question for everyone here to make sure everyone's actually learning tonight. Why would my bias be more so bullish right here? I would not take the trade, but why would it be biased in this area? And then I'm going to map another level right here with the ATR. And then everybody should be able to tell me what we're waiting on. Numerical EMAs, non-surging above. Okay, so this is the ATR, the level that I just mapped right here. So we know, okay, we're not going to enter this trade right here because the EMAs are all down here and they're jumbled. We're not going to enter this trade over here. So the patient side of me would tell me to wait until the 9 EMA crosses this ATR. So if we zoom over here, look right here where it actually happened at this candle when the 9 EMA crossed. We started pushing up. I would have a target top side. I would enter the trade over here and right here in this area, but you can see we had a volume spike on that. Again, this is where volume is debunked. When you see these things, you don't necessarily have to fucking look at volume because you know, okay, there, if this breaks, there's going to be a volume spike. If it rejects, there's going to be a decrease in volume and we're going to reverse. So my trade would have been entered here. I have an upside target, which was a pre-market high. As we're pushing into it, which on this trade, we might have made 10, 20, 30, 40%, whatever. But I would scale into this high up here. So I would start scaling my position after this high broke and we're pushing into this next level. When I tell people, okay, say NVDA, my target is 149.16 right here. That doesn't mean I'm holding my position until it gets to 149.16. It means I'm going to scale my position into that. Because people are going to start scaling into that. And it's more so of the algorithms and the bots that see the same thing. So we're essentially trading with the big guys because we have the edge and we know how these things work. Um, I'm not going to wait for a 149, 14, 16 break or whatever. I'm going to enter the position right here on this crossover and I'm going to ride it up. We break over here, and this is when I'm going to start looking to scale. And then I'm going to close the rest of my position right here. That should make sense to everyone. Don't enter a trade unless you have a target, but have a reason to enter the trade. And our reason to enter the trade was the 9 crossed over where the ATR was. So that's the only indicator we have on the top side to push us forward. We mapped out the level. We would not enter over here because the 9 EMA is too far away. We would enter over here because the 9 EMA has already crossed. Yeah, the 920 cross over here would essentially be our closing point. And a lot of times what you'll see on the 9 and 20 crossover is you will see a double bottom or a double top. If we're going up, we're going to see a double top. If we're going down, you're going to see a double bottom. So right here we had this. So The 9 EMA is too far from the 20 EMA right here to actually cross. So we're going to get a low. We're going to bounce back. The 9 EMA rejected. So we're going to use this level here as a stop loss. So we enter here on this crossover. We ride it up, scale our position, and then we close out over here. And then I think Team Money said a SPY one. Does anybody have questions about this chart here that we're at? But essentially, guys, this should help everyone time your entries right. If the 90 EMA is too far away from a breakout level, it's not going to break out. That's all it comes down to. We have to wait for that. If you have FOMO, I guarantee you, say you were in NVDA 155 contracts right here for 50 cents. They went to 75 cents right here. Well, over here, they're at 40 cents. So you get that adrenaline rush over here because you're up $25. And then if you would have just, then you get the panic over here and you end up stopping out of the trade. If you just fucking wait for this right here, there's no panic involved in trading. There's no panic involved. If you're wrong, you're wrong. That's part of it. But if you wait for that, there's no panic involved. Just wait for that 9 EMA to be close to breakout levels. I know I post all the time. Everybody's like, "Oh, it's going to break out. It's going to break out." And I'm like, the 9 EMA on the 5 minute chart has to get to this level. This is what I mean. That's it. So I'm not in the trade. I'm waiting for it. Be patient. Wait for it. It's as simple as that. It's not hard. It's just it comes down to being patient. That's it. We have a infinite money glitch, and when I say that, I'm fully confident this is a fucking infinite money glitch. It just comes down to being patient and waiting for that ATM to fucking start spitting out money. So we will go down here to SPY. T Money said 11. What'd you say? 11:26. It ain't even 11. What's the date? I thought it was December. I mean, not December. I thought it was November 1st. I can't even keep up with my days. I'm kidding. Let me read these real quick. Thank you, Bentley. I'm more confident after this training. See you tomorrow. Sounds good, Tommy. Thank you for hopping on. The MA single on a short later in the day is the same. And Sam here, he just said the 90 MA signal to short later in the day on the same NVDA chart. Sam has become a master of the fucking reversal. So we honestly need to get Sam on here for a live session one day and ask him some questions because he fucking calls that reversal every time before it happens. I'm like, this thing's bullish, and Sam's like, nope, this is about to reverse it. And sure enough, there's a fucking knife candle that follows. But when I first started this Discord, my plan was not to make money off of you guys, and as you guys can probably tell, I've traded lightly, um, but I wanted to build a team that we're all like-minded and that we all trade the same. And I think we're at the point now where we are all doing that, but we all see things differently, and that is very beneficial. But it takes everybody speaking up and having a voice for us all to be successful and trade as one. Where's 11:26 right here? This I can just look at this one and tell that this was a zero DTE's got 8 alive on this day, but T Money I can tell you it was a trend day, but the open market you could easily tell that this was not tradable just simply because of how jumbled the EMAs were through here. And you can see we broke the 50 EMA with the 9 EMA, and then we started chopping. So if I did short this, I would have closed that once I started seeing that. Essentially, this is a really good chart for a learning example because if we were trading zero DTEs on any of this, we probably would have lost money. Um, same concept over here. We have, let me just pull this down. We have our ATR right here, which we rejected. We broke over here, but initially we didn't break it because The 9 EMA was too far away in this point, and then we did break it and we pulled back. But there's when the 50 EMA comes into play. The 50 EMA has became my favorite indicator simply because anytime it looks like a reversal, the 50 EMA has been holding it on SPY. Um, and we bounced off of it right there. And then again, you have our other indicators over here. There's nothing I can say about this chart to say, hey, we could have done this to make money because we would have lost money on any trade we fucking took on this chart, essentially. But you can look at the indicators, and this does become a help. There's no 920 EMA crossover, 50 EMA support, broke the 50 EMA, bounced on ATR and VWAP. So our indicators were there and they worked for us, but that would have kept us from losing too much, if that makes sense. Um, but this chart right here, I can 100% say I may have traded on this day. If I did, I lost money. This may be the day that I learned the Discord and I was pissed off. But you can't really make money on zero DTEs in a market like this. And it comes down to essentially what I mentioned at the beginning of the class, the separation of the EMAs. You can see there was really not much separation on these. But with that being said, okay, Steve, one more. Steve-O said AMD on Friday. Steve-O, same concept. If we're looking at our indicators over here, same thing. The only problem here is we wouldn't have known where to stop out on this trade. So we would have our levels, which would be the ATR right here, and then we'd have our 50 EMA on the downside, which was right here. And you can see the actual breakout happened when the 9 and 50 EMA crossed, and then pull up again when the 9 and ATR crossed right there. But again, that was another one that's more so false breakout. You could have made money, but it would have had to been through the scalping mentality. But we see these indicators. We have to take these trades, guys. We're not going to win trades every day. But if we play it right, we can lose 4 trades out of the week and win one and still be profitable. But once we see these things, it's a life changer. It's going to keep us out of rushing into trades. It's going to save our lives. 9 EMA right here. Here's another example. 9 EMA, 200 EMA. We look at like it's going to short right here. We're going to break this level. We're going to short. We filled the gap. We're going to drop. Look how the 9 EMA approached the 200. It curved right here. So that tells us there that it's going to reverse. Um, but I think I've explained everything. It should all make sense to everyone. Hopefully it does make sense to everyone. Um, but I think the real quest is going to be seeing it live tomorrow. Um, and that's when it becomes real. We all know what to look for now. We all know how not to rush trades. If we enter a trade because of 50 EMA broke, look where the 9 EMA is, and that's going to tell us if we're entering early or not, because it's going to pull back to the 9 EMA, 50 EMA crossover. If the 9 EMA rejects on that, then it's going to reverse. Question on this one. The Zoom happened when the 9 and 50 pushed it over. Yeah, right here. Yeah. And without looking at that, Jesse, same thing goes back to the volume. I can tell you that the fucking volume spiked on that candle. That's why we don't necessarily need volume anymore. And I'll zoom in just to see if the volume did spike. I said that without even looking, and it did. The volume spiked on that candle. Um, that's why I don't use volume for intraday trading. If I was swing trading, I would, but for this strategy, the strategy is literally fail proof. It just comes down to not over analyzing the charts and trusting it. So if we would have entered the 950 crossover, we could have scaled at the ATR. And then our trade would have been safe. We could have kept scaling on hesitation topside. Jesse, there's a push anytime the 90 EMA crosses anything. Whether it's a key level, the key level, the ATR, the 200 EMA, the 50 EMA VWAP. That's what this whole class has been about. is showing you how the breakouts happen when the 9 EMA. Um, no, Jaden, Jaden asked, mostly 5 minutes. It's any chart. It's any chart. I'm just using the 5 minute chart because it's a safe chart. And it's easy to teach on. That's the only reason I'm doing that. So again, here I have a key level mapped right here. This is the 1 minute chart. Well, we push up, we pull back, have a huge knife down to the 9 EMA. But when does the actual breakout happen? When the 9 EMA crosses this level. It's any chart. The only time I go to the 1 minute chart is for early entry if all of the time frames line up. So if I'm bullish on the 10 minute chart, the 5 minute chart has to be bullish, the 1 minute chart has to be bullish, then I can get my early entry on that. So the 5 minute chart may have told us to enter up here. The 1 minute chart told us to enter on this crossover here. They all have to line up, and that's what it comes down to. Again, I appreciate all the questions. Hopefully, everybody has enjoyed the night, and everybody is on the same page now going into tomorrow. But I do think tonight has been the the best class I have taught, essentially because it's opening up and it's showing you guys how easy this is. And the past 4 months, I've kind of taken off and been training like $100 or whatever the fuck it was. And that's opened the door for opportunity for people to ask questions, and it has. So I've had time to sit back and look at, okay, well, I'm doing this, but I'm not thinking to explain this. So that's why I've been doing what I'm doing. Everybody probably thinks this guy's made so much money. Why is he not trading with more? Well, it's because it's not about me. It's about making sure my legacy lives on. And the only way I can do that is through you guys. Um, I can teach you guys all day, and then you can teach your kids, and your kids can teach their kids, and it's all Bentley trading. Um, but it did take me taking a fucking step back and understanding. Like while I'm live, I don't think to explain these things in detail, and tonight I did. Um, Venom, that's it. That's why. Venom said, "Why do you trade tiny accounts?" That's why. Because it's more appealing to. I grew up with nothing. I grew up in a crack house. My dad was a drug addict. My mom was a drug addict. My brother, sister, drug addict. My brother's in prison for 30 years. I came over that. If you ask my brother why he's in the position that he is in, he's going to say his family. If you ask me why I'm in the position that I'm in, I'm going to say because of my family. So life's all about perspective. And I took what I learned and taught myself by getting myself out of that environment, and I harnessed that. And my main goal is to teach people who are stuck in those 9 to 5 jobs, who want to get out of it, that there's a light at the end of the tunnel and there's a way to do it. Um, that's what I'm here for. I don't give a fuck about making $100,000 tomorrow. I give a fuck about making sure that you guys succeed because that makes me happy. Um, I don't give a fuck if I make $100,000 tomorrow. Now, if Venom, if you come in here tomorrow and make $1,000, that's going to make my entire fucking week. That's what I'm here for, and that's what I'm about. There's a difference between a leader and a boss, and a leader is someone that leads by example. They can show you how to do it, and that's what I'm here for. I want to show you guys that it's possible, and that's why I trade with small accounts. It doesn't take a lot of money in the stock market to get rich and to get out of that 9 to 5. That's why I'm here, and that's why I'm always going to be here. Um, I want to see you guys succeed, and I do get frustrated at times because I don't think to say, okay, well, I'm doing this or this, but also I don't understand why people don't understand what I'm saying. So it took me stepping back and taking a different approach to this to understand, okay, well, I didn't explain this, like I did tonight. And hopefully tonight we can all move forward. But that's why I always say ask questions. There's no such thing as a dumb question. I'm here to teach. I want you guys to succeed. If somebody in my Discord makes $1 million next year and I make 500,000, I'm going to be so happy that I taught someone how to do that and they beat me. That's what I want. That's what I want out of life, and that's what I want to be remembered by. Is I was able to change at least one person's life. But with that being said, I appreciate everybody hopping on. We'll get this recording posted shortly. Um, and I can't wait to see what we do this week.